We try to think long term, so not caught up in the day-to-day, horse race, but thinking long term, investing for the long term for our clients. What I see for 2026 is continued strong growth from technology and this AI infrastructure build out, and the eventual flow through to the platforms like AWS, and then software businesses hopefully accelerating their organic revenue growth as well.
So some concerns I think have seeped into the market over the last couple of months that maybe the AI trade is playing itself out a little bit. Maybe it's a little bit of a bubble, maybe, but then I'll get a Dan Ives in here from Wedbush and I'll say, hey, we're in the very early innings of a long-term game here. How do you guys think about it?
Yeah, Dan Ives is a super fan. I love hearing his comments.
He's okay.
I think yesterday was a really good kind of example of what's the sentiment is like in markets. So there was an information article yesterday morning about Microsoft and the fact that their fabric product was selling slowly. But I think that that's really irrelevant and taken way out of proportion. Fabric is a brand new product, 1 year old. People don't even know how to use the thing yet. It's an AI agent product. Businesses are trying to figure out what those even are before they implement them. So I think it's an irrelevant thing. I think Microsoft's bigger problem is getting enough supply to meet all the demand, not demand itself. But gosh, that took the stock down 3% in the morning, which was a really big reaction to a product that's way less than 1% of their revenue. And then in the afternoon, you saw Dario Amodei criticize OpenAI, saying that they're basically YOLOing the business. That's a new application of that phrase. And I think that that's a really good word, though, because investors right now want disciplined growth, not YOLO growth.
Okay, but let's take it down to St. Louis. I mean, we've been coming up on claims here, folks, with Jed Ellerbroek. If I go out from Busch Stadium west, I go out to the land of Emerson Electric.
That's right.
Okay, iconic St. Louis company.
Yeah.
Forsyth Boulevard, whatever. How are they going to use AI? I get how I use AI. Lisa's glued to AI. Mm-hmm. Paul, you started, right?
Sure.
You like power AI?
Oh, yeah.
What are corporations going to do with AI like Emerson Electric?
Yeah, sure. I think we're going to see companies like Emerson start to deploy robots here eventually. I think we're already seeing Amazon do that in their warehouses. Emerson is an industrial company that's trying to find kind of physical AI applications that they can use themselves and then also help their customers deploy.
I don't know, Tom. Last Sunday, I had lunch with my 29-year-old daughter, 21-year-old son. And I say, how do you guys use AI in your daily lives? I didn't speak for the next 90 minutes. They were just going.
I agree strongly.
They were just going. And in work, in school, and it's just...
Did they buy lunch?
Oh, please. No.
Our analysts, we have a 5-person analyst team at Argent. And, if you had asked me 2 years ago, I would probably said we need to hire 2 more. Now I think we probably just need to hire 1. And our analysts, a year ago, they were spending close to 0% of their time using AI tools. Today, you asked them, more than half their time is spent using AI tools. They're still working the same documents. They're searching through SEC filings. They're reading sell-side research. But the AI tools help them do it faster and more efficiently.
That's a single most important 2 sentences on Bloomberg surveillance this week.